Yeah, that is correct. Right before COVID and during COVID, how I think we had a lot of operators who came into the space and they weren't underwriting correctly. They weren't underwriting conservatively. They were underwriting to double digit rent growth. They were not expecting the interest rate to go up. And right after COVID, around 2022, 2023, all of that happened, which created a lot of stress and strain. And when that happened, it basically forced a lot of operators to sell short on their deals or be forced to refinance in a high interest rate environment. And we both know that those two options are not the best options.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey folks, welcome back to the show. Today's guest, Jamie Chatman, is the co-founder and managing partner of Multifamily Asset Capital, where he leads acquisitions, investor relations, and portfolio strategy for the firm's private equity investments in multifamily real estate. Jamie, welcome to the show.
Hey, Dylan, how are you? Thank you for having me.
Doing well, man. Doing well. I know you're out in beautiful South Florida, and we were talking before hopping on here about the multifamily space and how you got into multifamily from single family. And I want to ask you about that specifically. So you had a personal portfolio in single family and saw that, bigger is better in your case, right?
Yeah, I did. I was able to scale to 17 single family homes in 3 years with some business partners, and also started my own property management company to kind of manage these properties better. And then I quickly realized that this has become a job. This is not, everything you hear about real estate is, oh, it's passive income. Well, when you reach that kind of level, even with systems in place, it still becomes a job. And that's kind of, not what I was looking for. So that's when I found multifamily real estate, and it offers the scale that I was looking for to have more doors and to have a better return over time.
Now, in the last couple of years in multifamily specifically, I've noticed this trend from the outside looking in that it was like almost a no-brainer in like 2019, 2020. They had so many operators in the space. And then it seems like there was an influx, and maybe people thought like it was a no lose proposition, and people bought deals wrong, right? And so there is some level of distress on the operator side right now in syndications and fund managers, operators who now have to find a way to exit at the 5 year mark.
Yeah, that is correct. Right before COVID and during COVID, how I think we had a lot of operators who came into the space and they weren't underwriting correctly. They weren't underwriting conservatively. They were underwriting to double digit rent growth. They were not expecting the interest rate to go up. And right after COVID, around 2022, 2023, all of that happened, which created a lot of stress and strain. And when that happened, it basically forced a lot of operators to sell short on their deals or be forced to refinance in a high interest rate environment. And we both know that those two options are not the best options, especially when you are providing equity as an equity partner to these operators who basically bought deals wrong. So when that happened, if you look at the last couple of years, there's started to been a shift where operators who are now positioned to buy those properties that previous operators had bought incorrectly because of their underwriting, and they're buying them for a significant discount. And that's kind of how we got started in the game, because we started a single asset fund a couple of years ago, raising capital and becoming equity partners with these operators, these top tier operators. And we are noticing that these top tier operators are going and they're buying these assets that are distressed, but they're distressed financially. They're distressed debt wise, and
not
they're buying
physically.
these. Yeah, they're buying these assets 30% cheaper than what they're actually worth. So we're hopping into as many deals as we can, as long as the underwriting makes sense, as long as the underwriting is conservative. But of course, with our underwriting, we look at a lot of different, things like, is there population growth there? Is there, rent growth going on there? How's the economy going? Is there um, wage growth there? What are the economic driving factors for that area? That all still plays a role in the properties that we choose to invest in, even though the deal may look good economically. We still want to make sure there's that economic driving factor in that market, because if something was to switch or change, we'll still be safe.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
Now, when we talk about the segments in the multifamily space, you've got your super high end lux, lots of amenities. You've got, what I would call like rental grade. And then, you've got the ability to do value add and bring one from maybe a lower grade to a higher grade. But you've also got, senior housing, workforce housing, affordable housing. Have you identified one segment? Are you active across multiple? What's your strategy?
So we've zeroed in. We prefer basically B class properties and A or B class neighborhoods. We figured that is the best bet. When we talk about value add, we're basically talking about renovations, bringing classic units up to a modern looking unit, a updated unit. We're not looking to replace cast iron. We're not looking for any heavy duty remodels or rebuild. We're basically just looking to bring the older looking classic unit up to a more updated modern look, so we can force a premium with rents. We may be looking to drive rents up $100 to $150 after we do these renovations. We're staying away from the C class properties because of the deferred maintenance on it. And
Yeah.
depending on who you're buying it from, especially if that operator was in hot water, you can almost bet that they never spent any capex on renovating the property the way it needed to be. So even if you go and do your inspections, you still may be finding that you're dumping a whole bunch of money into this property because of the deferred maintenance that hasn't been taken care of in the last several years. So we've come up with basically that B class properties and A or B class neighborhoods is going to be the best bet for us. They may be a little bit more pricey than the C class properties, but we're spending way less in deferred maintenance. We're spending way less in repairs because of that. And then the renovations that we're doing, we can also force a premium because we're in a better neighborhood.
Now, when we talk about being able to make offers on these properties, I've been seeing more people make creative offers now, but I've also seen some more desperation on the side of sellers. So there may be some more open mindedness to some of these offers. Have you made creative offers? Do you think that creative offers maybe are more possible now than previously? Are you seeing a different trend currently? What's your perspective on, the types of offers that are being put out there and then being accepted?
Yeah, I would imagine, because I know you come from the distress side where you're probably dealing with sellers who may need to get out of a property fairly quickly. So the offers do become more creative. So there's always an opportunity for a more creative offer to get out of a sinking ship. So far as creativity on our end, we have not had to create, we have not had to use creative offers because like I said, we run a fund structure, so we are equity partners. So we have operators, tried and true operators, who are getting these deals. And when they get these deals, they come to us and say, "Hey, we have a deal. Would you like to be our equity partner?" And then that's when we go to our investors. So we're not really on the side of making any offers towards getting done. That's being done by the operator, and that's when I said, like, the way we have this structured, it's a no-brainer for us and our investors, and also there's no stress on our end so far as having to get this deal done because we are partnered with operators who've been in the game for several years. They've already had exits. They have not had a capital call, even though just because they haven't doesn't mean they won't, in the future. But we're looking for operators that really know their stuff when it comes to operating a multifamily asset, increasing the NOI, the net operating income, and then exiting that property to get our investors pay back their preferred return.
Now, when we're talking about raising capital, working with investors and so forth, was this a new area for you to get involved in investor relations? Had you previously, had capital partners, and what was that process like for you personally with raising capital and with being able to bring people together for these deals?
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
Yeah, so this is a complete pivot. Me and my partner, Chris Wilson, I came on to Multifamily Asset Capital, and at that point, it was just a acquisition company. We were the operators. We were looking to get into the multifamily space by getting a building. We had tried for about a year and a half, and none of the numbers were making sense. We were doing the operating. We were doing the underwriting on the buildings. We were underwriting conservatively. We're running the numbers. We're submitting LOIs. None of them are getting accepted. And we had saw that there has been a complete disconnect between the sellers and what they think that their building is worth. Because now these sellers, they want to get as much money out of it as they can. And they are ignoring the fact that they have mismanaged this property or they misbought it. So they're still wanting to get paid. And to me, that's not how that works. You don't get paid for making a mistake. You know what I'm saying? So if you bought this building wrong, you did not do conservative underwriting, and then now you are mismanaging or operating this asset, and you still think you're going to get $1 million payout, there's just no way. So for about a year and a half, we had been gone through. We had probably submitted, I would say six LOIs. We submitted 6 LOIs in a year and a half. We did not make it to best and final, and I'm glad we didn't because we were not going to overpay for these properties just because the seller thought that they should get a payday when you have and when you run the underwriting and you see that these numbers are all fudged and they can't answer half the questions you ask them. So that's when we pivoted to a fund structure where we're still going to get in the multifamily space. We're still going to own these buildings, but we're going to own equity and we're going to be equity partners. And we're going to build a fund and we're going to find investors who want to diversify from their typical investments, whether it be, stock market, bonds. That's usually what everybody puts their money into. Well, now this is an opportunity for you to own a real asset, an asset that you can touch, feel, look at. It's a good tried and true asset class. Real estate has been around since the beginning of time. People have fought wars, died for it, sold it, bought it. This is a tried and true asset as long as you mind numbers. And so we want to offer that to our investors to be able to own a piece of real estate, but not have to worry about the headache of having your phone go off because a tenant is upset or a tenant is locked out or a tenant has a complaint or the toilet doesn't work. And then you're having to do this and do that. You don't have to worry about that as an equity partner. That's been taken care of by the operators. So
Yeah, it's an opportunity right now that I think more people are becoming aware that they can truly invest passively. I mean, when you're talking about investing in a fund, in a syndication, as a limited partner, people have now more ability to go find these opportunities than before, able to listen to folks like yourself, able to,
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
type in AI and search, how do I invest passively in real estate? And the answers that they're getting right now are dialed in. And then also there's opportunities that I've seen, for fractional investing. And there's more and more opportunities for folks across the country, really, that run the gamut. Everything from multifamily to like storage facilities to single family and so on. I do think that right now you are seeing, the everyday, average American starting to see that, hey, I don't have to swing a hammer, but I can involve myself in real estate investing. And we're right there.
Yeah, absolutely. Absolutely. I think it's, I think it's one of those things where when it comes to raising capital, there are people who are apprehensive about it, right? And that's why, as a company, we hold these monthly webinars to educate our investors. I would never tell you just to jump right into anything, especially when you're dealing with money, and especially when you're dealing with a large sum of money that you've spent your whole life saving up for, right? So we have these webinars every month that I encourage our investors to jump on, and we talk about different things like this. We talk about diversifying your portfolio through real assets. And it's not just real estate too. Real estate is one of several, but we push them to do something, even if it's not with us, and even if it's not in real estate. We want to educate people that the stock market and the bonds is not everything, and that your financial advisor or financial manager, they may only be putting you in things that gets them paid. But there are other asset classes out there that will, alternative assets that will get you a much higher return on your money in a shorter period of time. And we want to educate and have people get involved in that, because in the long run, it does create a legacy for you and your family if you start doing this at a, earlier age, and you start to see that money really compound on itself.
Yeah. That's the name of the game is get into the game, start, right? And taking down a multifamily deal or a single family deal, you know, can seem daunting, and which is why it's terrific to be able to have folks like yourself to help people get into this space. And then, maybe down the line they could start to do something where they may have more active managing role. But as a way to get into the space, it's an incredible opportunity for folks. Jamie, we are coming up on time here, though. Where can folks go? Where can our audience go if they're interested in reaching out to you and your team or learning more about Multifamily Asset Capital?
Yeah, we have a website. You can go to multifamilyassetcapital.com. You can also find me on LinkedIn, Jamie Chatman, Jamie, last name Chatman. You can find me on LinkedIn. We have 5 properties and about $60 million of asset under management, 814 units, and spread across 4 different states. So we're moving, and this is now the time to do it. So if anybody's interested, please reach out and we can talk more about what your goals are and how we can help you.
Jamie, thank you so much for coming on the show today.
Thank you, Don. I appreciate it. Nice meeting you.
Thanks for joining us for today's show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing on your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. You can also check out the show's notes for access to free resources, how to get access to world-class lead generation, and even how to work with me directly one-on-one. Don't forget to subscribe so you never miss another episode. See you on the next show.